Hello and welcome to my next edition of War in the Markets. Before I begin today's review, I just wanted to all of you to give your feedback to me on the sound quality and the audio quality because I've just purchased a new pair of microphones, and please do tell me whether the microphone is working okay. Otherwise, I'll make necessary corrections. So on that note, good, a green letter day for the markets today, driven by some news of a letter being exchanged over a 14-point program to discuss the end of the war. So the markets were roaring in terms of right from the morning till the evening, and the Nifty index was up about 1.25%, and the mid, small, and large micro cap indices were all up somewhere between 1.5 to 2%. The advanced decline ratio was fabulous, 2,200 stocks advancing to 7,700 stocks declining. So clearly a very broad-based participation and buying. If you look at all the sectoral indices, everything was in the green except for, I think, the energy index as well as the FMCG index. The best performing sectors were the PSU bank, the realty, the auto, and all those rate sensitive sectors. What is puzzling about the market today, which is what makes today's market very interesting, was that FIIs sold almost 6,000 crore worth of stocks today. While DIS compensated with about 6,800 stocks, I don't think a net difference of 1,000 crores really helps us to understand why there was a broad-based rally. So clearly, one has to say that today was the day of retail. I think the retail took the news to heart and bought right across the sectoral chain and the stock chain. So the FIS, I was wondering in the data when I looked at it, so whether there was some short covering which helped the rally. But when I dig deep, I found that the Nifty started off at a low and ended at a high. So there was no bounce of short covering. And when I look at the F&O data, it's also puzzling because FIS have added 40,000 short futures today, taking the net futures to 2.8 lakh contracts. And even on the options side, they bought puts of 400,000 plus, protecting themselves from the downside. So clearly, this news of a potential resolution to the war has not been taken by the FIIs to heart, at least as far as India is concerned. From that point of view, right, in the evening today, Mr. Trump actually said, who knows, the deal may not happen. So I think there was a bit of nervousness. But what we can say definitely is that the oil price definitely reacted. Yesterday, if you remember, the oil price had spiked to $114. By the night, it had eased because Mr. Hegseth had said something positive to about 109. Today, during the day, it went below 100 and finally settled at about 101, 102, and that's where it's trading right now. So oil market has clearly taken it positively, but for some reason, FIs have not taken this resolution of the war potential as a positive in India. A puzzling one. I will have to wait for tomorrow's data to see whether they sustain this selling tomorrow also, but really puzzling. And hats off that DIs and retails have really stepped in today and supported. And in fact, if you see, this has been story of the month so far, not just the May month, but right from April. So you'll be surprised to know that if you take the 1 month returns, the small cap index is up almost 18%. The mid cap index is up 12%, while the Nifty is up only 5%. So after the March correction, there's been a bounce back in the month of April, right, and leading up to today. And it's the small caps and the mid caps which have outperformed the large caps. In fact, even the micro caps are up about 80%. So clearly, what has changed the market is that post the March correction, and which I've been talking to you every day about it, is that retail has felt that this correction is overdone. And so they've all gone and started averaging that portfolio and are holding up the broader market, as you saw from the advanced decline ratio today. So because of all this buying action, the volatility index also dropped about 7% to, I think, somewhere around 16.8 or 17. So clearly all positive signals which led to the rise. Just the puzzling factor is the FIS selling. Now, unless we get specific discussion with some FIs on why they sold, one can't get to read the truth. But as a result now, if you see overnight and for tomorrow, the FIs are carrying about 2.8 lakh contracts short in the Nifty futures. And that means they've added today 40,000 plus short contracts over and above the long. So I think there was 11,000 increase in the long and about 53,000 increase in the short. So the net was 40,000. So sitting on such a heavily short position, if this war news gets confirmed overnight, there's going to be a huge short covering rally tomorrow. However, the opposite is also true, that if, as Mr. Trump has been hinting, oh, I don't know whether they'll accept the deal, if there's further negative news overnight, the FIs would be justified in their short positions and may continue their cash selling tomorrow also. So very interesting time ahead. And like I said, the DIs have also started buying back again, 7,000 crores almost buying today. So clearly the clarity from the earnings season is also helping the DIs to start buying, and I expect this to sustain. So overall, for tomorrow or for the next few days, right, clearly geopolitical trends, Brent price trends will have a play. The rupee, in fact, strengthened today almost 70 basis points to come back below 95 to 94.80, right? So every indicator has turned positive today except FIS selling. And the puzzle of that, let's observe it for the next few days to understand why. And if indeed the war is going to get resolved, and looks like it's going to get resolved, right? Retail would have proved right in terms of this whole rally for the last 1 month. However, if the war worsens for any reason, and because I'm only saying this because of the unpredictability of Mr. Trump and the lack of credibility in terms of what he says one day to the next, that Trump-induced uncertainty will remain a hang until we get a decisive signature of a document saying, okay, we hold off, because he's continuing the blockade, he says. So I think that the strategy that I've been recommending for the retail medium-term investors to keep gradually accumulating over ever since the war started would be paying handsome dividends. Yes, of course, you'd be better off if you had put all of your money in the worst time in March, but who had the guts to do that, right? And who had the guts to recommend to do that? So I think a staggered purchase was the best way to cushion from any fall for intermittent volatility. But end of the day, because of this consistent rally, with the small cap index up 18% and mid cap 12%, I'm sure your diversified portfolios would be showing a healthy bounce back, right? So don't have to change any strategy because of this. Stick to this, wait for clarity. Your regular buying every day is going to be really beneficial for you in the medium term. And before I end, again, as I said, do give me feedback on the audio control so that I can try to do something to improve if it's still not doing well. Somebody said there was an echo yesterday. So please do give me the feedback. Thank you for listening. Look forward to my next update.